Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. Coming to the event that played out yesterday post the Fed policy announcement where the interest rates were unchanged, the dollar index has further corrected to 102.9 levels, while the US Treasury bond yields also further weakened to 4%, which is positive from the perspective of liquidity flows towards risk on asset classes like equity markets, both global and Indian. The other positive trigger for us is the Brent crude oil prices, which is currently trading at a 5-month low, currently quoting $74-75 a barrel, which is a big positive for an oil importing economy like India. The current trend in Brent crude suggests that it could further dip towards the levels of $71-69 a barrel. Overall, all these factors are lining in favor of the Indian equity markets, which we have seen in the last few weeks has resulted in a sharp surge. A quick check on the global markets on expected lines. S&P has continued its positive momentum and has crossed the levels of 4,700. Going forward, we expect the up move to continue towards the levels of 4,830, 4,850, while on the downside 4,630 should act as an important support zone. Coming to Nifty, post the Fed policy outcome, expect a positive start for the Indian indices in today's trade. The last few sessions we have reiterated that 20,750 will positionally act as an important support area. We still feel this will remain as a crucial support going forward as well, positionally, that is. From an intraday perspective, that is, if you see, the index is expected to open closer towards 21,100. Important support will be the levels of 20,980, 21,000, and till this zone holds, index could witness continuation of the up move towards 21,200, 21,280 levels, while on the downside 20,980 should act as the support zone. Coming to the OI data, significant call writing is witnessed in 20,950, 21,000 strikes, while on the put front 20,900, 20,850 and 20,800 witnessed considerable open interest addition. Post today's gap up opening, if the index sustains above the levels of 21,050 for the first hour, it could lead to a sharp short covering in the index towards the levels of in the index in the 21,000 and 21,050 call options. The overall range for the day could be 20,900 on the downside and 21,230 on the upside. Coming to Bank Nifty, the immediate support for the index is likely the zone of 46,800, 46,850, and till this zone holds, we can expect an up move towards 47,500, 47,600 on the upside. Minor resistance is placed at 47,600, 47,650, crossing which we could see a further up move towards the levels of 47,950, 48,100. In case 46,800 breaks, index can retest its next support placed at 46,610, 46,530 levels. From the weekly expiry perspective, significant open interest built up is witnessed in 47,000 and 47,100 puts, while on the call side it is seen in 47,300 and 47,400, implying a near-term range of 46,850 on the downside and 47,600 on the upside for the banking index. Coming to sectors and stocks in momentum, Nifty Realty was the best performing sectorial index, gaining 1.61% yesterday. Its constituents witnessed a stellar performance with the likes of DLH, Godrej Properties and Prestige witnessing positive traction. Auto sector experienced outperformance with excellent momentum being witnessed in the likes of Hero MotoCorp, Bajaj Auto and TVS Motors. From the broader market, if we see, bullish setup was observed in NTPC, Power Grid, LT, Tata Consumer, REC, PFC, NMDC, Max Health, SAIL, Trent, Elchem, Polycab, CESC, Radico Khaitan, Hudco, CDSL and Aegis Chemical. Coming to the FI/DI data, in the cash segment, FI is bought to the tune of 4,700 crores, while DI is sold to the tune of 960 crores. FI buying is also witnessed, constitutes the bulk deal in Axis Bank, which was to the tune of 3,700 crore. FI long short ratio in index futures has marginally declined to 57.74 as they squared off about 11,500 index future long positions. On the stock futures front, FIs have sold to the tune of 35,200 contracts, while on the options front, FIs added almost 1.4 lakh call contracts and 1 lakh put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.